A recession has hit the US economy, and yet, the Fed continues to raise interest rates in a desperate attempt to bring down inflation. Some experts say that this recession will last a few years, and that everyone must be prepared. But what exactly is the root of this inflation? Well, there are varying opinions. But today, we will hear from ARK Invest CEO Cathie Wood about her take on this inflation. We've recently done a video on Cathie Wood, but today, she'll be giving us a fresh set of eyes on the current economic climate. Thanks for your continued support. Let's dive right into the video.
Yes, well, he repeated what he said in Jackson Hole, essentially. They're focused only on prices. Now, they have a dual mandate, employment and prices. Frankly, I'm happier that they're focused on more of a price rule, so that's good. But I think the reason for the pivot is going to be a massive amount of deflation in the system. It's already here. If you look at commodity prices, the gold price, for example, it actually peaked in August of 2020, and it's at the lower end of a 2-year range. While copper has broken down, oil is breaking down, lumber has crashed, iron ore as well. Freight rates out there are suggesting that the supply chains are loosening up quite significantly. The rates are coming down. So we've got deflation in the system. And the way I describe what's going on right now, I was in my early days in my career in the early 80s when Volcker was taking a sledgehammer to inflation because it was embedded in the system after 15 years of profligate spending, Vietnam War, Great Society, and then going off the gold exchange standard. A sledgehammer, that's what he needed. That is what I believe Chairman Powell thinks he needs. And we just don't think that's true because we see so much deflation. And then one more thing. We also see a massive inventory overhang around the world. You've got Europe in recession, China in recession effectively. And here in the United States, retailers are bulging with inventories, which will have to be cleared with discounts. So we think we're going to see some major downside surprises in inflation during the next 3 to 6 months.
In this first clip, Cathie Wood gives her thoughts on the Fed's policies to combat inflation. Although Cathie Wood is glad that the Fed is focusing on prices, she still believes that they are bound to pivot due to signs of deflation. Cathie says that deflation is evident in the prices of goods such as gold and lumber. Cathie Wood compares Fed Chair Jerome Powell's attitude with former Fed Chair Volcker, adding that Powell might be trying to mimic Volcker's attitude in dealing with inflation. Cathie also notes that economic downturns can be seen across the world, from Europe to China. She concludes by saying that the US may as well be bound for a recession due to an excess of inventory, which will force businesses to sell their items at discounted rates.
So the Fed is looking at the PCE deflator, which peaked in February at 5.3%. It's down to 4.6%. And we believe we've already seen some negative numbers. Nobody believes them. We do. And we believe we're going to see some more negative numbers during the next 3 to 6 months. So wouldn't be surprised to see it well down into the 3s in the next 3 to 6 months, if not into that 2 handle. And I think if we get enough sequential declines, that the Fed will change its tune quite dramatically. Well, I think that the Fed will be looking at the sequential numbers, many of which will be negative, and that will encourage them. Even if we don't have that 2 handle, we're in the 3s and we're coming down quickly, I think they'll change their tune. Perhaps they will take interest rates up 75 basis points this time, but the next time 25 to 50 basis points, and then following that, we shall see.
In this clip, Cathie Wood lays down the possible data that could lead the Fed to pivot on its policies. Cathie talks about the Personal Consumption Expenditures Deflator, or PCE deflator, which the Fed used to monitor inflation in the US. Cathie says that she expects the PCE deflator to show 3% inflation or even 2% in the coming months. However, Cathie adds that if the inflation rate decline continues beyond this point, we might see some pivots in the Fed's policies.
Well, we we think profits are going to be under tremendous pressure, and until some of these cost declines make it through and inventories are cleared. Now, we do not think this will be anything like 08, 09, which I know many people fear. We think it's much more of an inventory recession and a drag from the rest of the world, Europe being crushed by energy prices, China being or readjusting to quote unquote common prosperity. So I think it'll be more of an inventory recession. And, there's been a lot of denial that we are in recession. We think we are. We think it's an inventory recession and that we'll be coming out next year, whereas many people, forecasters are saying we'll be going in next year. So I actually think the market will be looking up as we're exiting this year.
In this clip, Cathie states a very reassuring perspective, saying that this crisis won't be as bad as the 2008 to 2009 financial crisis. Cathie says everything is expected to subside after excess inventory is sold at lower prices. Cathie says she does believe that the US is in a recession, an inventory recession at that, and contrary to other analysts, she believes that we will be coming out of this recession next year. In this next clip, Cathie Wood tackles employment.
Well, we do think there's been some labor hoarding in here. The employment numbers have looked strong. If you peel the onion a bit, the underbelly of employment is not strong, with household employment essentially flat over the last 4 to 5 months, which includes a lot of small businesses. That's where we see a lot of the pain right now. But the labor hoarding is because companies couldn't get labor during the supply shock and the COVID. And so now that they can, they're holding on a little longer than I think they would normally. I'd be surprised if we go all the way to 6%. I do think the inventory recession will be somewhat sharp and will take the unemployment rate up, but I'd be surprised to see us get all the way to 6%.
In this clip, Cathie talks about labor hoarding going on among companies. She says that companies couldn't get any labor due to COVID and the supply chain issues during the past few years. So now, they are holding on to their employees longer. Cathie concludes by saying that she does believe the upcoming inventory recession may take the unemployment rate up.
I think our strategy has been hurt very, very much, as have most growth strategies, by the fears associated with inflation and higher interest rates. And as I mentioned, we think that's going to turn around. We see the growth coming out of these 5 platforms. These are 5 innovation platforms. These are exponential growth trajectories. And we faced a lot of COVID-related comparison issues in stocks like Roku, Teladoc, Zoom, and so forth. So there's been a lot of confusion on very short-term indicators in the market, but the explosive growth is there. It has happened, and we think it's going to continue. We see that in the global public equity markets, truly disruptive innovation, which is all we focus on, is priced at roughly $8 trillion in value in the markets today. That number, we believe, is going to more than 200 trillion during the next 8 to 10 years. So it's going from less than 10% of the global public equity market to what we believe will be 60%. And the reason we believe that it will move to that level is because these platforms are going to disrupt the traditional world order in a way like we have never seen before. We were not around in the early 1900s when telephone, electricity, and the automobile disrupted the existing world order. These are 5 platforms, not 3, and they involve 14 different technologies. So we do extensive research. I think we do the best research, if I might say, because of our sole focus on it. And we give that research away because we want people to understand how their lives are going to change, and how their children's, grandchildren's lives are going to change, and how important it is for all of us to get on the right side of change.
In this clip, Cathie Wood does admit that their growth strategy at ARK has been significantly harmed by the high interest rates and fears of a recession. However, she does note that the stocks she had in her company have invested in will play a significant role in the new world order over the next few years. Cathie Wood and ARK are fully committed to technology stocks, as they believe these will change the lives of everyone in the near future. Do you agree with Cathie Wood's take on this recession? What are your thoughts on this? Do you think it'll last a few years? Give us your insights in the comment section down below. If you enjoyed this video, give us a like and subscribe. And we'll catch you on the next one.